Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a second update video for you today. It's 10:30 p.m. Market has moved down inside of the symmetrical triangle that I talked about this afternoon. So I wanted to shoot an update, kind of let you know what I'm thinking. Before I get into that, please remember, if you're watching this video and you enjoy it, you should give me a like. It helps me out tremendously. Also, don't forget to subscribe to the channel if you haven't already. I'm going to be doing some giveaways in the future. I've got to check on all the technical terms of service and all that kind of stuff. Make sure that I'm covered there. But essentially, I'm going to be doing some giveaways when I reach certain milestones with my subscriber count. I've never really taken YouTube very seriously, but some friends of mine have recommended that I actually do a better job with it. So I said, you know what? I will do that. So again, subscribe to the channel if you haven't already. Don't forget to give it a thumbs up and leave me a comment letting me know what you think. Even if it's just to say thanks for the video, those comments apparently help a whole lot with the YouTube algorithm. With all that being said, let's jump into the charts and I'll talk about what I'm seeing here. So first off, I looked at this symmetrical triangle quite a bit today. I redrew it a couple of times, tried to find the one that looked the most likely to me, and I think this is it. So this looks great, right? We came up here a while ago on a 5-minute chart. We actually reached into the overbought territory right here. And on the 4-hour chart, that's right about the time we came up just shy at the top of this triangle. And then, of course, we started to dump. Now, the funny thing is I'm a bear, but I went long here. I went long right here, and I'll tell you why I went long. I went long because, number one, this is the 61.8 Fibonacci level on the smaller time frame. So on a 4-hour time frame, from our bottom around 97.59 to our top over here, that was the 61.8 fib. Everybody knows by now, if you watch my videos, I love that Fibonacci level. It's a golden ratio. We were also severely oversold on the RSI down here, so I went ahead and entered a long position there. Also, it lined up at the time, when I went long, it lined up with the bottom of this triangle, so I was looking for it to find support. Now, since then, it has slipped down underneath that triangle a little bit on price and also on the RSI. So this candle closes in 26 minutes, and where it closes will determine on whether or not I stay in that long position. Ideally, what I was hoping for, well, actually, if I'm being blunt, what I'm really hoping for is I'm hoping it fails and I get stopped out, and I'm hoping this thing dumps. But the reason I entered a long position is because I don't trade off of my hopes and dreams. I trade off of what the chart looks like, and this chart to me looks like it's got a very good chance of trying to go up and test the top line again. Now, if it does, it might bust through, or it might just get rejected again. Who knows? Okay, but that's the reason I went long, because even though I am bear biased, the chart right now looks more bullish on the shorter time frame. Okay. Again, if it closes underneath that, I've got to stop at 10,055. It's just a little day trade, so I will get stopped out if it goes much lower. Right now, it's made a low of 10,071, so very, very close to my stop loss, and it's fine. If I get stopped out, I get stopped out. Not a huge deal. But I am bullish over the next couple of hours. Okay, depending on where this thing closes at. But that being said, overall, that bearish picture just keeps looking more and more likely. If we take a look over here at our giant head and shoulders, this is the head and shoulders that is living and breathing on the daily chart for our total market cap. You can see here that it is not yet confirmed. It actually needs to break down underneath this level, this neckline at around 244, $243 billion, somewhere in that ballpark. Okay. But really, I'm not looking at that right at the moment. What I'm looking for is this giant Fibonacci level. This is the Fibonacci level from the top of the market in 2018. It was January 2018 that the market actually topped out, all the way down to the bottom in December 2018. We're sitting, and we've been finding support over and over and over again on the 23.6 fib. We came down again just a little bit ago. Yeah, this is a daily candle. It's only been going for about 3.5 hours. We've already came down and tested it again. And the general rule of thumb is the more times you test a level of support, the more likely it is to fail. Now, some people are going to disagree and say, no, the more you test it, the stronger it is. But I look at it like this. If I go look at a brick wall or a concrete wall and I start hitting it with a hammer, at first it's good. It's strong. It's tough. But if I just keep hitting it with a hammer, eventually that concrete is going to start to have little cracks, little chips, and the more I bang on that concrete wall, eventually it's going to collapse. And that's kind of what I look at support, or resistance. The more it gets slammed into, the more likely it is to eventually fail, right? Buyers are going to get tired of buying it back up. and eventually it's going to fall through that. That's usually the way it works. So again, we've tested that, and we will see. We will see where this thing goes, right? Very, very interesting. You know, for me in the short term, it'll be great if it bounces. I'll make some money, but you know, overall, I won't be too sad if it falls through there and dumps either, because I've still got my position trades open. You know, my short trades that I opened up on Bitcoin at 8,800, and of course my short trades on Litecoin that are opened up at an average of 127. So I just wanted to shoot this quick video. This one's not going to be very long. I just want to show you what I'm thinking. And, you know, again, if you don't know anything about, you know, trading, I would highly suggest you start learning about patterns in the charts, also learning about things like Fibonacci levels. It really will help put your mind at ease. We're still inside of our giant descending triangle, which, by the way, I don't know if I talked about this in the video earlier or not, so I'll just mention this very quickly. You know, for anybody that says that this is a symmetrical triangle, I see people on Twitter saying, oh, it's a symmetrical triangle. You know, it's drawn like this, okay? Here's my counter to that. Just look at the RSI. The RSI tells a very, very clear picture. That is a descending triangle on the RSI, and it is a descending triangle on price. Okay, and those absolutely work. See, now this is a symmetrical triangle on price, and it's a symmetrical triangle on RSI. See how that match? Very, very easy to tell the difference. All right, with all that being said, please remember I am literally some guy sitting in a spare bedroom. I am not a financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional financial advice before making any type of investment in cryptocurrency. If you enjoyed the video, be sure and give it a thumbs up and subscribe to the channel. Also, don't forget you can check the description for links where you can follow me on Twitter, TradingView, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.